I'm going to introduce our first speaker, Cody Koster. Now, Cody grew up on a dairy farm in Michigan, in the McBain, Falmouth area, went to Michigan State for his undergraduate degree, and has been working with a group called Rice Dairy for the last 4 years as a dairy risk manager. So Cody works, as he says it, he works hand in hand with dairy producers from all across the country to sort of work out risk mitigation strategies for their businesses, and really applying the different tools available to help them ensure that their business stays viable through ups and downs in the market. So Cody, I just want to really thank you for taking time out of what is an incredibly busy month for you, I know, and appreciate your helping us understand these tools a little bit better. So I'll go ahead and hand it over to you.
Absolutely. Thank you, Barry. So what we have decided to talk upon is the Dairy RP program, or Dairy Revenue Protection Program. And we at Rice Dairy, we've built a free online calculator. And to get to that calculator in the portal, the website is ricedairyrs, as in riskservices.com. Now, once you get to the home page, we'll call it, this is kind of what it looks like. We have a few different key components on the top. We have the quotes calculator that we'll get to in a second. You can sign up for email alerts. And we also have on YouTube a Rice Dairy TV that we do. We do different segments every week. We do some bi-daily, and we post those up as best we can. Even while we're in quarantine, we're still pushing those videos out. If you are a customer of Rice Dairy Risk Services, we give you an online portal so you can track your coverage as we go forward. But for the time being, what we'd like to look at, if I just scroll down, we have some news. We have actually partnered with CRNG, Commodity Risk Management Group, out of Platteville, Wisconsin. And the company will soon be called Volatile as we all kind of transition together. So we have some videos explaining that. I talk a little bit about Rice Dairy Risk Services, who we are, what we offer. And there's also a way to get in touch with us. So after you watch this video, if you'd like to know a little bit more, you can put your name, email, and a little comment saying, you know, how you came across us, what we can help you out with. But the big portion of this is this little yellow button, get a quote. And this is going to be a way to every single day. The way this program works is it's open every day that the CME was open. So what happens at 1:10 Central, the CME technically closes. It's closed on the floor for the trading day. Prices that had transpired from that day are going to settle out. Now, this is a quarterly settled program offered in Class 3, Class 4, and then your components, butter, fat, and protein. Now, as you're going to notice on our calculator, quarter 3 is not offered right now, and butter, fat, and protein is not available for the following quarters going out. The reason for that is in the rules of the program, if there is to be a limit move in any of the commodities, cheese, butter, non-fat, dry whey, Class 3, Class 4, it will close out that quarter for the day. So for an example, yesterday, we were limit down in Class 4. So that shut off Class 3 and Class 4 for quarter 3. We were also limit down in butter throughout the curve. So as you can see, there is no components, butter, fat, and protein available. So what I'd like to do is kind of focus on quarter 4 here. But starting at the top, we have all 50 states available. You can write this program in every state that there is dairy being made. And when you come to the website, it actually defaults to the great state of Michigan. So we'll stay on that and look what Michigan has to offer. So going to quarter 4, again, these prices last night, let's look at the Class 3 portion right now. An average for quarter 4 on the board was $15.43. Now, what the program offers, if I scroll down a little bit, you can protect these prices at 80, 85, 90, and 95% of that futures price. And I'll be honest right now, a lot of people have not strayed away from the 95th percentile. So that's kind of the one that I'd like to stick at looking with today. So 95% of $15.43 is $14.66. And as we walk across the calculator, the gross premium, if this were not subsidized 44% by the government, it would cost roughly 95 cents a hundredweight. But because it is subsidized, the government's saying, okay, we will eat 42 cents of that, which leaves you, the producer, to pay the 53 cents per hundredweight after the quarter ends. And generically what happens is these premiums are not due until 30 to 60 days after the full quarter ends. So for quarter 4 2020, you're not actually looking for a premium due until mid to late February of 2021. So it is a very cash flow nice program that people have really jumped on and really taken a hold of. What we also have on our calculator, you can go on here and you can toggle between class 3 and class 4. It will move the blended price to whatever that quarter that you have clicked on had settled to from the day prior. I should also mention that the rules of the program are we can write this coverage from 4 p.m. Central all the way until 9 a.m. Central the next day. So for an example, right now it is 9 a.m. Central here in Chicago. It's closed. The window has diminished now when we're done. But what these prices were is they were from the settle of yesterday. Once prices settle at 110 today, we will have new prices that come into the calculator with possibly new premiums depending on what happened. So kind of going down the calculator, we have declared to protect 100% class 3 of our milk. At the 95th percentile, so you're protecting a floor price of $14.66, it will cost 53 cents per hundredweight. Now down here on the quarterly declared production, you can edit this. And just for a quick example, if we typed in 1 million pounds per quarter, again, this is not monthly, we have to remember this is a quarterly production. We will slide down, and this kind of brings out the meat of what the program is intended to use. So we have a declared milk production of 1 million pounds, coverage level at 95% with a protection factor at 1.0. There is a little side deal to the protection factor, but let's go at it from the 1.0 protection factor just for the sake of argument really fast. The expected yield for Michigan for quarter 4 is 6,713. And essentially what the yield factor is the USDA coming in here and saying, okay, we've taken averages of 10 years, 5 years, 2 years, and saying how much milk has Michigan produced per cow for that time. And the yield factor can either, hurt you in the long run, or it can help you per se. So for an example, on the yield factor, it's 6,713. If the yield factor actually comes in lesser than that, let's say it comes in at 6,600, it would mean that less revenue is being made in Michigan. So you would actually probably see an increase in the payout if there were to be one. Less revenue generated per the state, more indemnity per producer. Now on the other side, if everyone's adding cows, or maybe they're bumping their butter, fat, and protein up, making more fluid milk, if this number comes in higher than the expected yield, it could actually go against you, because what the USDA is saying is you are technically making more milk per farm per cow, which means your revenue is increasing, so the indemnity will decrease. So that is always something that we want to watch and kind of be cognizant about. The trigger price, like we said, at the 95th percentile is $14.66. We also calculate a revenue guarantee of $146,585. Now, what this number is showing, and I always hate to say it this way, but if milk were to go to, to absolute zero, this is the amount of production that you are protecting. This is the monetary value that you would see either from the milk check or from this insurance program to help you get paid back. And we walk down we do it in per hundredweight and also dollar amount. So the premium before subsidy, 95 cents per hundredweight. The government is going to pick up 42 cents per hundredweight of that, leaving you as the producer to, pay 53 cents or $5,306. Now, there is another key component of this. Let's just say that you're a dairy producer and you call in and say, Cody, I'd like to be 100% hedged for quarter 4 on my class 3 production, but I'd like a little bit more wiggle room in case we go higher to add into my coverage, which the program says that if you are to receive an indemnity, you have to show milk checks from those 3 months that prove you can produce that milk. So if they know they can produce this milk, what we could possibly do is come in here on the quarterly production, take 1,000,000 pounds, divide it by the 1.5 protection factor, that gets you 666,000 pounds. Slide the protection factor over, because now technically you are protected 100%. For every penny that we drop below your floor price at $14.66, you are going to see 1.5 cents back to yourself. And I guess the point that I was trying to make on this is the cost after after subsidy to the producer, it shows 80 cents per hundredweight, but because we declared less pounds, it is the same monetary value, $5,307. So this is just a little bit of a way that we've kind of helped producers leave themselves open if they'd like. The rule in the program is, out of that milk that you say you produce, they are leaving a little bit of room for, bad winters, bad summers. You have to be able to prove that you can produce 85% of that. And the reason that is let's just say we in Michigan have a July and August of 102. We know cows are going to fall off of production, and they don't want that to impede on the program. They want you to be able to get your payout and still be able to go on milking those cows. So that's why they gave you that 15% of wiggle room. On components, it's actually 10%. So if you create a 4.0 butter fat, we have a really hot summer, maybe feed wasn't as good as it could have been in the past couple of years, and you produce a 3.7 butter fat, you will be indemnified on the full 4.0 as long as you can stay within that 10% realm. So I know that's a little getting into the weeds on the program, but it's a big part that we at Rice Dairy have really dug into and really helped our producers understand and try to use this to the best of their advantage. And I also want to bring up one other thing, scrolling to the top. Let's just say in Michigan, generically, we are 50-50, class 3 to class 4, sometimes 60-40, depending on where markets are, where milk is getting shipped. In this program, you can toggle this class-based insurance from 100% class 3 to 100% class 4. You can also look at it as a split of 50-50. But I will say, if you're going to do 50% class 3, 50% class 4, I will ask that you write them on 2 separate endorsements, because the laws of averages say if class 4 is $2 lower than class 3, which it generically is right now, if class 3 falls apart and class 4 rallies $3 and you've written that coverage together, there would not be an indemnity. If you separated them, class 3 in this bucket, class 4 in this bucket, you have a higher likelihood of an indemnity as markets kind of move as they need to. So that's one thing that we've really learned to help our guys out. Also on the program, there is no rule that says you can't write every single day. If you'd like to do 500,000 pounds every single day, that is completely within your right. The only days that the program is closed, there's 3 USDA reports that come out a month, and that is milk production, cold storage, and dairy products. So anytime one of those reports come out, let's say that milk production comes out this coming Thursday, DRP will not be available Thursday night. We will have to wait until the close Friday to get our new prices and our new premiums to be able to protect.
Cody, thank you. That helps. So can you give me a little bit of insight? You work with lots of clients around the country. How do people fit this in with their overall portfolio in terms of risk management?
Absolutely. So because the program is so subsidized, and because the premium is not due until 30, 60 days after the quarter ends, we've seen a lot of folks kind of go this route and layer into it. So with their portfolio, sometimes they would do no risk management at all. And this is a way for them to mitigate that risk, especially in this COVID-19 era when we just don't know what's going to happen with milk prices. And the best thing about this program, Barry, is it leaves your upside all the way open. So knock on wood, one day if we do go back to $20 in milk, the only thing that you have to pay is your premium. It's just like car insurance. If we don't get into this accident, you pay your premium and you go home. If we do get into a little bit of a fender bender, like we are in right now, it will pay you out, after your premium is paid. So
Excellent.
it's been very well received through folks, and what we do on the rice dairy side kind of complements it. We can go to the board. We can sell different option structures to help cheapen it up. Because the reason that this is so high right now, volatility on the CME is extremely high. We have limit up days, we have limit down days, and that's why you're seeing this 53 cents per hundredweight. When we first started this program, it wasn't that expensive. I'd say between 15 to 20 cents, sometimes even cheaper than that. But with volatility being as high as it is, that transpires into the insurance program, and that's why it looks the way that it does.
Oh, that makes sense. Very good. So Cody, thank you so much. I know you probably got to jump back on 50 urgent things with the trading going on. If people want to follow up with you and have questions, would you just send them to this website and have them fill in the form you showed previously?
You can go to the website, fill out the form, or I can give you my email if that works also, if people have questions that they'd like answered right away.
You bet.
Okay, so my
Okay.
email is cjk@ricedairy.com.
Perfect. Again, thanks very much, Cody Koster with Rice Dairy. Appreciate your time this morning and for filling us in on dairy revenue protection.
Absolutely. Thank you, guys.
All right, thanks. With that, we're going to switch gears a little bit here. Let me get the video switched over and introduce Karl Jones. So Karl is a vice president at Rabo AgriFinance here in Michigan. He's been with Rabo for 3.5 years, but he's got 33 years of experience in banking. Karl is also a Michigan native, did his undergraduate degree in finance at Michigan State University, followed up with an MBA from Western Michigan. And one reason we are engaging with him today is he's been generous with his time, and he's serving on our Michigan State University Extension Dairy Advisory Team. And so really enjoyed interacting with him. And Karl's going to fill us in a little bit on something that's very timely, the Payroll Protection Program. That's a part of the new CARES Act that's passed in the wake of the coronavirus pandemic we're dealing with. So Karl, if you could fill us in, I would really appreciate it.
Sure. Thanks, Barry. I really appreciate it. As you mentioned, obviously today I'm going to talk a little bit about an overview of the various government programs that are available for the COVID-19 disaster relief, and certainly do a deeper dive into the PPP program. So it certainly can be argued that the last 90 days, probably 90 days ago, that the broad U.S. economy was probably the strongest it's ever been. And then clearly in the last 60 days, we've seen a complete reversal of that with mass layoffs and a shutdown of large portions of the economy. And now all of a sudden we're potentially facing the worst economy that any of us has ever seen. And I think the government certainly recognized this, and to date has had 3 different stimulus packages that they've passed to try and respond to this. One of the first ones that they passed was really to kind of broaden the unemployment insurance program and expand eligibility to and increase benefits that were available to folks. Further, they said that they were going to give billions for disaster relief programs. And the U.S. government's usual disaster relief programs are available through the U.S. Small Business Administration. These are usually available to hard-hit areas in response to tornadoes or hurricanes, and they require the federal government to classify a specific geography as eligible for disaster relief. As the COVID-19 virus spread, the government expanded that from initially Washington and California and New York, and now available to the whole country. This program kind of was available through the Economic Injury Disaster Loans, or EIDL is what they're kind of classified as. It had two parts to it. The first being a loan program that was an actual loan program, the second being an actual grant portion. And as you can imagine, anytime that there's forgivable money, people are very strongly interested in this. The problem is with this, and I'm not going to spend much time on it because, candidly, eligibility. Most agricultural entities did not qualify, and as I understand, with most of the audience being dairies, you'd have to look to other programs that are available for relief. I do mention it though because if you did apply for one of these, you can't qualify for this and the CARES program that we're going to talk about here shortly. So recognize that that's something you have to factor into your decisions on what you want to do. So clearly, based on the economic impact of COVID, Congress recognized that their first couple of attempts at stimulus to the economy was probably not going to be enough. And so they needed to pass a third package. And that third package was called the CARES Act. And that was approved on Friday, March 27th. And the amount of money that they threw at this was candidly $2 trillion. Now, there's many different elements to this program, but we're going to focus on the $349 billion portion of it, which is called the Payroll Protection Program, or PPP. Now, again, these funds were allocated by Congress on a Friday, and they told the Treasury Department, you need to get these funds out the door as quickly as possible. So the Treasury Department decided, instead of going through their traditional direct to the SBA, they tried to make it more accessible to folks. So they went through their SBA 7A lending program, where they partner with SBA approved lenders. And these partner banks then make the loans directly to their customers. But all of these loans have 100% government guarantee. So therefore, the bank lends their own capital, but technically these funds aren't at risk because the repayment is 100% guaranteed by the SBA. This would certainly expand the capacity from just the SBA staff to hundreds, if not thousands, of banks around the country. Now, I'm going to give you a frame of reference. Last year, the SBA did for the whole year in 7A loans, $28 billion. This program, again, is $349 billion. And so they're going to do essentially 10 times the volume of what they did all of last year in a time frame that's really less than one month that they'll kind of get all of those funds out. So as you can see, these banks are pretty much drinking through a hose at this stage at full blast. So, the SBA, because of that political pressure on them for speed, opened this lending program in 1 week. So again, you went from Friday to the next Friday, they actually opened this program. So as you can imagine, there was more than a few hiccups when they rolled this program out, because candidly, the rules were not even written by the time that this program was launched. And so it led to a lot of the member banks having their own interpretation of the rules and the guidance that the SBA was making available. There's also varying degrees of interest from the different banks, because without that proper guidance, they didn't want to necessarily have certain rules that come out later that allowed the SBA to not honor their guarantee. So there's a lot of variability as far as the interest from different banks out there. Should probably mention that, the three different banks, the types of banks that are eligible for this. So you've essentially got, you can go to SBA approved lenders that are either banks, SBA approved credit unions, or SBA approved farm credit systems. It's not a given that all of these entities out there are automatically part of the program. The SBA did say that they wanted to open it up to other people that are not approved currently, but I don't think that's going to actually work quick enough to actually have people expand the program before the money runs out. So who's actually eligible for this program? From an eligibility standpoint, it looks like most businesses that have less than 500 employees are eligible, and that does include dairy farms. The loans, in fact, are unsecured, and there's no personal guarantee. What does the actual loan cover? It's really designed to help businesses maintain their workers for a couple of months until we get through the pandemic. So eligible loan amounts are essentially 2.5 times your average monthly payroll. What's the most appealing feature of the program? I think the most appealing part is that up to 100% of your loan that you get can be forgiven if you can demonstrate that the monies were used to keep your current staff employed. So what are your eligible expenses that can be forgiven? Primarily, it's going to be the payroll, but it can be expanded to include any rent that you have or interest on a mortgage if you own the property instead of renting, and it also can include utilities there. So Barry, I'm going to have you probably pull up that worksheet for you on that loan calculation form. So as far as expenses that are eligible, I'm not going to get into that form yet, but just sorry, I probably jumped the gun a little bit there. As far as what counts as payroll, salary, wages, commissions, or tips are eligible. It is capped at 100,000 on an annualized basis for any employee, and also can include any employee benefits, any cost for vacation, parental, family leave, that kind of thing, state and local taxes, and then for a sole proprietor, any independent contractor, just mentioning that it's still capped at the $100,000 threshold. So what's eligible for the total payroll costs, which works out to be $100,000 a month. So you're going to take that 100,000 times it by 2.5 or 2.5 times that, and so you'd be eligible for a loan of up to $250,000. All of this can be forgiven, and how do you find out what's going to be forgiven? In 60 days after you've received the loan, you would actually have to fill out a worksheet that shows what you actually paid. And assuming you kept your staffing at the current level or $100,000 per month, that would mean 200,000 of that for payroll would be eligible to be forgiven. And then the other 50,000 you would kind of have to look at. You'd have to look at either utilities or rent or your interest on your mortgage, and then that could be eligible as well for forgiveness. So what happens if there's any loan balance after that 2 months that's not eligible for forgiveness? The loan and the terms of the loan are for 2 years. There's no payments for 6 months, and then any remaining balance would be just accruing interest at 1%. So pretty attractive rates. Saying, wow, that sounds like, and again, you had to kind of go through one of those 3 different lenders. I would tell you that, the challenge is that there's been such a strong push for an appetite from people to get some of this financing. And I know that Barry and I were on a call earlier that said that probably 2/3 of this money is spoken for in a 2-week time frame. So you need to kind of get your application in for sure. Each lender that you work with has got probably their own specific forms, but in general, they're relatively similar. The SBA application process is frankly, the application itself is really easy, and I'm going to have Barry send that out to you after the fact once we've got everybody's email. And then there's also a fact sheet that I think is pretty good about kind of explaining the highlights of the program as well. Probably the one thing that is more complicated than anything is what I had Barry pull up here, and which is really that Excel spreadsheet there. And this is where it gets a little bit more complicated. You do need, most lenders are going to ask you to provide your 2019's 940s, which are your quarterly payroll reports that show what you had in payroll and the taxes that you paid. And then maybe the 941s, all of this to kind of verify the estimated payroll that you're submitting. The other thing that I'd note on here, so if we kind of walk through here, if you look at that form, you'll see payroll costs on there. This lender that's worksheet that we're utilizing here, you can kind of go through and put in the whole last 12 months numbers from your 940s, and then it'll spread it out to the average monthly. I found that some of my customers tend to, they really wanted to simplify it. It got too complicated for them to try and go through any health benefits and then the retirement benefits. So a lot of them left that blank and just really stuck with the salaries, wages, tips, that kind of stuff. This Excel spreadsheet just calculated on an annual or on a monthly basis. And then as you can see, the 2.5 times there, it'll just calculate exactly what that is. So if we go down the sheet, that'll kind of talk through exactly what that 2.5 times that is. And again, if we use the 100,000 for the payroll, 2.5 times or 250 is the maximum loan amount that you'd qualify for. There is a $10 million cap, but I don't think many dairy farms are going to have that kind of payroll in that short of a period of time for sure. So again, if you scroll down a little bit, Barry, you see the documentation that most banks are going to ask you to provide, and that's really in attached to all of the it varies by lender. And so again, I think that's probably a little bit, I don't know if that's too much, too little, but I figure from here, probably a good spot to just stop and see what questions, if anybody has any there.
Thanks, Karl. One thing that was just kind of going through my head, somebody just new to this concept and, thinks, well, this is something I need to do to try to sustain my business through all this. What do you recommend? Turn to the bank that they have a relationship with already and see if they can work with them. Should they do this as fast as possible? What's the first 3 things they should think through?
Yeah, I think without question, they're going to need to go to their current bank, because what's happened is every one of my colleagues, I've talked to probably 6 or 7 bankers that I've worked with throughout the years, and every single one of them is working around the clock. And they are candidly not they won't do this for customers that are not their existing clients right now, just because the sheer volume, they're working around the clock to get these submitted for their existing clients. And candidly, you need to spend the time making sure that you're submitting everything and giving them a clean package, because what happens is they've got so many other people applying that they are really going strictly to the ones that provide the path of least resistance and make sure that the packages are complete. If you don't, it's just easier for them to make sure that they're focusing on the ones that they've got all the information, and then at the end of the day, they might send back incomplete packages, just a note saying, hey, I noticed that you didn't attach the 940s to this, so I didn't do anything with your application. Please resubmit with that. So make sure you're spending the time. If they have a checklist that they're giving you, make sure you go through and check off everything that they're asking you. If you send them part of it thinking, oh, they may not need that, I think you're going to be setting yourself up for waiting and getting stuck in the waiting game. And I think they just got overwhelmed from the get-go, and I think you're at this stage going to end up in line, and I think they're slowly working through the pipeline, but it's a pretty thick pipeline right now for sure.
That makes sense. So yeah, particularly when it's possible that the money may not get to the end of the line, taking the time up front to to cross your T's and dot your I's and have all the information there probably is wise, I guess.
Correct. I should mention that, while that 349 billion that was allocated was significant, and can't believe that we would burn through that as quickly as we are. I think that there's been certainly a lot of talk that, and I think there will be a lot more pressure on the government to make sure that they expand that program a little bit more, and maybe there'll be some more money that's going to be allocated. But there's no guarantees about that, so I wouldn't rest, on your assumption that that's going to happen, because there's no guarantee by any means.
Very good. Okay. One question about the loan application form. So is that something you developed? And I'll partially answer this. I'll say if you're on YouTube, if you go down to the comments below the video, or the description, I should say, if you show the full description there, click on more. There is a link to a zipped file there that I have, about 5 files that Karl provided. So you can look at some PDFs and even that spreadsheet that we showed on the video here. Karl, is that stuff that you got, some of it's federal documents, or that some of that you produced?
I'm sorry, you froze up there, so I probably missed part of what you just said there. So
I'm sorry, the document, the application form, is that something you produced, or you said they're a little different from each entity?
no, I think that that form is actually specific to the SBA form. All the other ones are specific to, and again, I'm going to tell you that, believe it or not, so Rabo, I work for Rabo AgriFinance, which is a division of Rabobank, which is a huge Dutch bank, but we are not a U.S. bank per se, at least. So we don't participate in this program. We have partner banks that we've partnered with on this. So that form that you see is actually Union Bank here locally's form, and I've partnered with them on some of my customers. And then we also have a partnership with Mechanics Bank in California that does all of our deposit gathering inside of Rabo. So we kind of partner with a couple of different sources on that. That SBA application form is directly from the SBA, but most of those other documents that are attached are Union Bank's specific forms.
Very good. Karl, thank you very much. Any last parting words of wisdom here for anybody listening in?
Just get your application in early, I guess.
Sounds good. Well, Karl, I appreciate your time, your expertise on this. As I said, anybody watching, we do have some of those documents available here. And of course, there's plenty of resources around the web. So with that, we'll wrap this up. Again, thanks to Karl Jones from Rabo AgriFinance for joining us this morning and filling us in. And have a good rest of the day, everybody.